Hello everyone, how are you? So well, thank you for joining me today. In this today's video, we'll talk about the home loan interest rate. And you must have heard the news recently that RBI has reduced the home loan interest rates or the repo rate by 25 basis point. Okay, so that means that that much of equivalent your interest rate should have also been dropped, but that's not the case, right? So as per the RBI's estimate, 60% of people who have the home loan may not see an immediate drop in the interest rate. The reason why? Because of the multiple lending rates available in India. So in today's video, we'll dive deep into each of these lending rates, how they are different, and I'll tell you the difference between all these lending rates and what should you opt for it. So you have a choice. It's not something that one lending rate is bad versus another. It's all about different choices, and at different stages, at different years of India, you have different lending rates. So we'll get into it, and I'll tell you which lending rate I usually opt for it. That's one way to look at, and also how you can check your home loan lending rate. So if your interest rates have not dropped in last few months after the RBI repo rate change, then this is a must video. You should watch for it. So let's get into it. So first, we will understand that how the lending rate philosophy determines the interest rate. Okay, so India basically have two sorts of interest rates. We have fixed interest rate and the floating interest rate. That's very simple by definition. Fixed is like the rate of interest remains fixed across the tenure of the loan. So if you have taken a home loan and let's say the banker have given you a 12% interest rate, that interest rate will gonna remain same throughout the loan term. Okay, that will not gonna change. So that's one way of looking at the interest rate. Generally, the fixed rate of interest is little higher than the regular one. Okay, so if the regular interest rate, which is the floating, is around 9%, let's say, the fixed would be around 11%, 11.5%, and so. So that's about the fixed interest rate. I have not seen so far in my life anyone having a fixed rate of interest, at least in the home loan category. The next is the floating interest rate. Floating, as by the word says, the rate of interest keeps changing as and when there's a change in the interest rate. The base rate, it could be anything. It could be base rate, it could be repo rate, it could be anything. If there's a change in certain things, but through the regulatory, the interest rates tend to change, or the bank can also change the interest rate depending upon multiple other factors. Okay, so most of you, I'm sure even more than 90% of people in India having a home loan would be having a floating interest rate. Okay, this is the actual rate of interest where you get around 9%, 8.5%. During COVID, it was around 7.5% also. So this is the majority of people have opted for, and by default. So these are the broad categories of home loan interest rate. Now, how they determine? So while fixed will remain a fixed interest, but how do they determine how much interest you need to pay in the floating rate of interest? So that is what a lending rate philosophy we call it. And I'll take you a brief in all those lending rate philosophy. So there are basically four lending rate philosophy in India. One is the benchmark prime lending rate, BPLR. Okay. Second is the base rate. Third is the marginal cost of funds based lending rate at MCLR. Last is the external benchmark based lending rate, that's EBLR. So all these are little technical words to pronounce per se, but it's very simple. For you, it's a very simple definition to understand. Okay, we don't need to get into the calculation, the formulas of it, because that's something a financial team does it at the bank's end. What we are concerned about, how does these different lending rate philosophy impact us? So that's what we look at next. So first we'll see what is BPLR. So BPLR is the earliest of the lending rate system. It was prior to 2000 and I think three applicable. Um, there's so basically a banks were at the helm to decide to whom they want to give how much of rate of interest. There was no transparency as such because it was not decided by the regulatory. There was no benchmark of having a BPLR, and like you being one of the highest net worth customer for a bank may give you a certain rate of interest compared to the others who are new to the bank, and so that's a problem with the That's where the RBI came up with a new philosophy, the base rate in 2010. Okay, and in the base rate, uh, though the base rate was still decided by the individual bank, but it was regulated by the RBI that it should not be unfair. It should not be something way too high, way too low. So that's a philosophy the bank came up. It used to consider the multiple factors like cost of funds, operating expenses, profit margins, and that depends bank to bank. So certain banks may have a higher base rate compared to the others, and so on. So that's where it was not so much competitive, though individual competition did play a role, and almost all those who have bought their homes between 2010 to 15, 16 have mostly the base rate. Okay. And again, this is decided by the individual banks. So there is no benchmark as such before deciding a base rate. Then came the MCLR. Okay, so MCLR, the RBI came up with MCLR in 2016. Okay, and this replaced the base rate system. Basically, it's a dynamic rate linked marginal cost of funds. Okay, so this is, I think, 60% or more than the customers right now have MCLR base rate system or MCLR rate system in their home loans. So generally, what happens if RBI, let's say, last 2 3 months back, when RBI declared a rate cut, a repo rate cut by 25 basis point, the MCLR customers, those who have MCLR base rate lending system, will see a change in their home loan interest rate probably after 2 quarters or like 6 months to 5 to 6 months later. So that's how the rate of interest changes for MCLR. It's not too frequent. It doesn't change the rate of interest as and when there's a change in the base rate or a repo rate. It takes time because that's a cycle it works in. So इसके फायदे भी हैं नुकसान में अगर if RBI have reduced the rate of interest then it's a loss for you, because you have to wait for 2 quarters to pass by and then only you will see a change. On the other side, if RBI has increased the rate of interest, then also you are in a better state because again it will take that much of time to increase the rate of interest for your loan. Okay, so it's both good or bad. So there's nothing regarding best in here. Okay. So again, it all depends upon the cost of funds, operating expenses of the banker from which you are opting for a home. Now, this is the latest one, which is called EBLR. Okay, so EBLR is just introduced in 2019. And what has happened with the EBLR? The RBI repo rate became a benchmark over here. So if the repo rate is around, let's say, 6.5%, okay, so that becomes a benchmark. So usually SBI takes a lead in changing the interest rate first whenever there's a rate cut or a rate hike from the RBI's end. And when the RBI did the rate cut in last quarter by 25 basis point, they were the first bankers to do it. So I think most of the bankers have done it because by the logic itself, the EBLR, those who have EBLR rate philosophy, it needs to happen immediately. It doesn't require you to wait for a quarter or a 2 quarter. It happens immediately. Like I have two home loans, one from Axis, one from HDFC. The HDFC one is on. I recently got that loan, so it's on EBLR. So the rate cut happened immediately. My rate of interest dropped from, I think it's 8.40 to 8.15 now. While at the same side, I have a home loan from Axis Bank, which is on the MCLR. So in that one, the rate cut still to happen. I have to wait for two more quarters, or probably 1 quarter already passed by, so I have to wait for one more quarter to see a rate cut over there. Okay, but that's still active at 8.55%, I guess. So EBLR brings in more transparency and immediate transmission of the policy rate changes. So this is something the most 40% of people have it. And if you look at the RBI stand on it, this is a recent article in the Hindu that EBR linked home loans have to become cheaper immediately as soon as there's a rate cut, while that for MCLR will take around 6 months. Okay. Now, which is best? So, depends. So, if you foresee RBI cutting off a rate in near future, then obviously the EBLR is the best option because it will give you the immediate change in your EMI or drop in your balance term. While if you feel that RBI is not gonna change the rate, reduce the repo rate while increase the repo rate, then the earlier one is best. But see, whenever you so there's though there's a flexibility to move between EBLR and MCLR, but it's not free. Okay, so whenever you want to switch from one to another, the bank will charge you some amount. So usually they'll charge you somewhere between 1,500 to 2,500, also depending upon the amount of home loan you have, the balance term, and all that. So if you are in any other philosophy lending rate like MCLR or base rate or BPCLR, then obviously you should change it to the latest one. See, because what we foresee now, mm, rate cuts have not been happening for 4 5 years. Last quarter, the first time the RBI had changed, have reduced the rate, repo rate, and the economists foresee to happen it couple of more times in the future this year. So obviously you should go for the EBLR that will give you immediate change in your EMI and will help you to save you on some money from it. Okay, so that's my take on it. Uh, Now how you can check your lending rate. There are three ways to look at. First, you can review your loan agreement with the banker. It might be mentioned over there. I have not seen in both the home loans which I have. Or you can visit your banker, or you can visit your lender from which you have opted for a loan, and that's the second way of looking at. Third is how you can also determine by looking at how frequently your interest rate changes. Like if the rate could happen, and if you already got the email SMS from your banker saying that your home loan rate will reduce by so and so basis point, then obviously you can think that you can see that it's a probably the advanced one, the EBLR one. But if you haven't received any such message so far, even after 2 3 months of the base rate cut happen, the repo rate cut happen, then obviously you are in the other lending rate philosophy. So please do check with your banker. And if you are in any other base rate cut philosophy than MCLR, EPLR, sorry, then please move it to EBLR. That's the most advanced one. It will give you the impact immediately. Okay. So that's it about in today's video. This is more to do with and make you understand what different sort of lending rates are. And not to forget, I make contents on finance. I have a few contents already there in my channel. Please do look at it, subscribe if you feel it makes sense to you. And thank you so much for your time.